Welcome to the first Middle East Securities Finance panel discussion. My name is Gabriel Frediani. I've been involved in repo for 30 years, mainly in market infrastructure. I've been involved in the region, advising absolute collateral and more recently United Nations designed outfit, liquidity, sustainability and facility. I have the honor of moderating a very impressive panel today where we will discuss the potential growth, the existing growth of the region. I will now start with Andrew, maybe, for the introduction.
So I'm Andrew Gegas. I'm the head of agency lending at BNP Paribas. We're a global agent lender and we have an interest in the Middle East as one of our regions for growth.
I'm Jalal Faruki. I'm head of custody and security services at Riyad Capital. We are one of the largest local investment banks and a custodian, and have been active in the securities lending and repo space for the past couple of years.
Hi, I'm Dimitri Orlando. I'm the head of sales for Europe, Middle East and Africa for Equilend. Equilend is a fintech solely focused on the securities finance industry. I've worked and covered the region for over 25 years and been at various different custodians through that time.
Hi, I'm Darren Crowther. I'm head of securities finance at Broadridge. Broadridge are a fintech who provides securities finance solutions, BPO services, so back office for hire services within the security finance space, and I've been working within the technology space for 24 years.
Alothman, Managing Director, Head of Security Services at Riyad Capital. We are the largest custodian in the Saudi market. We have over $200 billion of assets under custody, and we're based in Riyadh.
Hi, I'm Ali Janjan at HSBC. I'm covering the equity structuring solution. I'm based in Dubai because we believe at HSBC that the Middle East as a strategic region was high potential and high growth. And thanks for being here.
Good afternoon, everyone. I'm Andrew Stephen. I'm responsible for JP Morgan's client footprint growth in the Middle East. I've been most of my career in London, but as of last year, moved out to the Middle East to focus on growing the client franchise. JP Morgan, obviously, large universal bank with a very strong security services franchise, and within that, securities lending is a core business for us.
The first topic of discussion for today will be the high potential growth of the region. During our prep call, we actually discuss, is it high potential or is the growth already there? Maybe we can start with some numbers and a bit of background, and I will ask Dimitri to give us some figures of what is this market.
Sure, thank you. So look, I think the exciting thing for me in any new market is when I see data flowing through the pipes and into our ecosystem. And if you look back maybe even a year ago, although there was securities lending activity happening in the regional markets, there wasn't that much data flowing through. But if you look at it, the data set today, we actually see quite a lot. Now, it's not everything because there are still some trades that are happening that aren't flowing through the pipes, the standard pipes that we see. So having said that, what we are seeing at the minute right now is about $2.6 billion of lendable assets in Saudi Arabia and $370 million of assets out on loan just in Saudi Arabia, which is interesting in itself because some of those other markets, although there is securities lending activity, we're not actually seeing any of that data flow through the standard pipes, if you like, into our data set. Of that, 370 million that we're seeing out on loan, that's across 103 securities. Now, I know Jalal has more data from the local market perspective, and I'll hand over that to him shortly. But just as a comparison, if you like, the lending market in its whole is about $37 trillion of lendable assets and about $2.7 trillion out on loan on any given day. Focusing on some of the fixed income markets then as well, regionally and specifically with Saudi, we're also seeing about $20 billion of lendable corporate bonds and $1.6 billion of those out on loan, and $21 billion of lendable sovereign debt and $2 billion of that out on loan. And that is actually across all the GCC countries, not just Saudi Arabia. Jalal, did you have more?
Yeah, so I think when we look at the local market data, which comes from the depository, if you go back to the beginning of 2023, that data balance was basically zero. There was maybe very little or maybe one or two positions out on loan. If we look at September last year, you probably had around 30, 40 different securities on loan for a total value of about $180 million. When we look at this year, the market's grown significantly. You have around 166 positions on loan out of total listed companies of around 280. So more than half the market has some kind of position on loan. And you have around, $600, $550 million that are outstanding on loan as of end of August.
Is this a trend we're seeing across the different firms? Are you experiencing this from the London perspective, Andrew?
Yeah, so definitely for JP, Saudi Arabia was a key sort of market for us, and we went live with securities lending sort of middle of last year. As a result of that, we're starting to see clients come to market. And it's an interesting one, right, with the Middle East, because you've got international investors that have been active in securities lending for many, many years with their international portfolios. And now closer to home, as these domestic markets start to open up, the questions are like, hey, how do we get into these markets? How can we sort of generate the revenues that are available? But also then understanding how entering the local market is somewhat or could be different to the kind of the international models that they have today. So it's definitely a trend we've seen. I think one of the interesting things, I think, with Saudi in particular is we're seeing a lot of clients who are sort of, well, I like to call single country, right, where the portfolio is Saudi specific, and they are coming to market, and it's a client type that we would have never spoken to previously, because obviously lending wasn't available in Saudi Arabia. So now it's opening up a whole new sort of segment of the market, which typically Saudi domestic firms, or domestic investors, which we're able to now target.
So this dimension of domestic and cross-border, which arguably is recent, visible, if I understand correctly, is this something, Sarah, that you're seeing?
Yeah, so maybe if I can add, so the initiatives of the securities lending and borrowing framework in Saudi Arabia. So the EDA, the Saudi Arabian CSD, launched the securities lending and borrowing regulation that is approved by the CMA back in 2017. And as well as, so the market infrastructure, EDA, and the exchange, along with the market participants, the brokers and the custodians, along with the investors, they have collaborated for the sake of enhancing the changes in the regulations. And one of these changes actually, so they have allowed the expansion of the agent services with the third party. So this had added efficiency within the securities lending and borrowing program in Saudi Arabia.
So from a user case, I'll turn to you, Andrew, this time, as a firm with extremely large reach, where are the trends for you?
I think one of the points that we'll probably touch on a bit more detail is what you just discussed around understanding the international participants versus domestic participants. But the trend we're seeing from our client base in the region and elsewhere is interest in the markets, what's going on. Is there a potential for securities lending? Can they access it? What does it mean for their local securities? But also just, where's the future direction of travel? We're seeing trends from international investors more broadly beyond securities lending of investment into the Middle East. And with that, you're starting to see things like dual listings.
So we feel that as you pointed out, the numbers are still, from a global perspective, limited and small. But we all feel that this is the beginning of a very big adventure. As Sarah's pointed out, the regulatory framework's there. The numbers have started to come in. The visibility is there. You will benefit from this, won't you, Ali?
Definitely. In fact, to come back to the growth element, same thing on our side. We're witnessing, in fact, the growth, we can describe it as exponential. In fact, since the early 2024 and mainly in Saudi, volumes have been multiplied by 10, as highlighted by Dimitri. Now we're talking of wallet measured in $1 billion. And we in HSBC, in fact, we have identified and believed in this growth since the beginning. From day one, we have been working and collaborating with the regulator to refine the rules. We have done the first SBL transaction in Saudi Arabia. It was early 2020. first DFM SBL transaction mid-July, in fact mid-2023. And the way we are trying to implement this growth in a very careful and smooth way in order not to squeeze the liquidity in the market and to bring comfort to all market participants. So we take it as a responsible growth, in fact.
We have a specific panel on a specific point, on technology a bit later. But Darren, are you feeling from your perspective customers gearing up?
Yeah, for sure. We've seen an interest in the last 2 or 3 years around technology solutions from the market. Quite a lot of it has gone positively well because of Saudi, as an example. They've used international standard framework for the way they approach things. So when companies are trying to educate their clients on how the market works, what the participants are, the systems behind that already kind of meet those standards, so it's quite easy. There's always some customization or specifics, but we found quite a lot of interest. Jalal's numbers are quite interesting. You went from 0 to 30 or 40 names to now 160 names. You can no longer really run things manually on the side. You need technology underpinning the operational risk, and of it going wrong is now too wide. So that's where the demand's coming from. The number of shares that are out there is now really making it operationally challenging for firms to do a manual method. So they're definitely looking for technology.
Can I ask this panel? I mean, we obviously spoken about the role of Saudi Arabia in the region. How does the rest of the region, very quickly, how is that benefiting? Or is this a friend or foe? Is this an opportunity, or is it either or is it driving? I mean, everybody's basically all over the place here, but maybe a quick word on that would be interesting.
I think there's definitely an opportunity. I think that's why we're all here, and it's not just a Saudi story. I think Saudi's just the front runner, the early adopter, and to Darren's point, they've embraced the technology solutions that are available in order to help that growth happen. If you speak to the various different regulators in each of the GCC countries, I think they're all trying to observe how Saudi Arabia is evolving, and also then looking at how their own markets can follow suit. I think the opportunity in Saudi Arabia is just slightly larger at the moment because of the number of securities that are actually listed on the exchange, which is greater than any of the other markets in the region. So yeah, I mean, I think the other markets there definitely have potential, but in terms of the scale of the Saudi market, it perhaps offers a greater potential from a revenue perspective, and we're all here because we're trying to generate revenue in some way, shape or form, right? If it's the borrowers are borrowing securities, not just for a hobby, that they're trying to earn revenue on the back of it. The agent lenders are doing the same. So Saudi definitely offers probably the biggest potential for that revenue.
No, definitely Saudi is leading the SBL growth in the market. And that's not a surprise. It's the biggest economy within the GCC market. But definitely as well, it's not and will not be an isolated case. We have DFM and Qatar who have implemented the same SBL model. We believe and we expect that they will witness the same successful story in the future. You have ADX and Kuwait who will be encouraged to implement the same framework as well. We believe that Oman, Bahrain will follow the same route and try to develop their SBL market as well. The beauty of this region, in fact, is like each country has its own growth and vision plan, and the momentum is done on an individual and collective basis. Whatever is implemented and whatever is a successful story in one market is replicated into another market. Whatever is a failure in one market is tried to be avoided in the other markets. So the good vibes is that all the GCC countries has promising projects. They are on the good track, and we highly believe that whether each country or collectively, they will take part of this journey of growth.
And you, Sarah, as a local Saudi, I know Jalal, you also have a view on this. Is this a view you share as well?
Yeah, definitely. So I couldn't agree more with Dimitri. So it's a mutual benefit across the region. For example, if we have a local lender and then with a qualified foreign investor based, could be in Dubai or in any other area in the region. Each jurisdiction here in the region within the GCC are enhancing and developing their SPL framework, as Eli mentioned, and eventually growing the economy across the GCC and also enhancing the revenue across the exchange. And I couldn't agree more with Eli, mentioning that the Saudi exchange is the largest in the region. In fact, we became the 10th largest market capitalization exchange within the globe. So this is, I think it's a great milestone for the Saudi exchange.
I think if you look at Asia as an example as well, I'm going to put my Pazla hat back on. But the size of the markets doesn't take away from the opportunity for some of the smaller markets as well. And they're all growing at their own speed. There's a bit of fragmentation around rules and implementation, but that's fine. And I think that, you know, the opportunity in APAC demonstrates what can be done in the world. So some of the markets are very large and liquid, others are a bit smaller and have different rules, but the opportunity for those markets has been excellent, and now we're seeing this mirrored within the region here as well.
With that, maybe I think one key thing from all of these markets in the region, they all have the infrastructure, they all have the regulations, and they have people willing to lend inventory. I think the driver in Saudi for it to really pick up, and it was again years after the regulation was there, was people willing to pay. Because we have to make an investment in technology and capability. It's the same from any international custodian. They have to invest in building the legal opinions and building the documentation and all of the infrastructure for that market to work. And until you have borrowers willing to pay to borrow those shares, it's not gonna get going. And we have something in common in a lot of the regional markets that's helping with that. So you have market making frameworks in the UAE, you have exchange listed derivatives in the UAE and Saudi and other markets as well. So these are all also drivers of demand for stock loan, and they're part of making it an economically viable product. Otherwise, no one is going to really invest in the capability to deliver.
Yeah, I'd add to that, right? I think a lot of these countries in the GCC are on this journey to go from like a frontier market to an emerging market. And I think one of the prerequisites for that under MSCI is that they need to have an established SPL framework. And I think if you read further into that, it's not just the framework. They need to be able to demonstrate that it's a functioning framework and that you can actually trade using that framework. So I think that's the first one, right? So they're all on this journey to sort of, reduce dependency on oil and diversify their economies, and this whole big capital markets transformation going on across the region. I think also one of the things that I'd say that we've seen, sort of, which is quite interesting, is there's always this, I call it halo effect. I don't know, when you see one thing happening in one market, they're like cousins, right? So you see one thing happening in one market, immediately the countries across the GCC will start to say, okay, they're doing that over there. How can we implement? How can we benefit? And I think it was, I can't remember if it was Sarah or Dimitri that said it. I think one of the benefits of kind of the Saudi story, I know we'll talk about this a bit later on, is there's lessons that can be learned, right? So Saudi went in first. They worked with market participants. People came in, international banks came and worked with the regulators. There was a real kind of cohesive approach to getting the market live. They didn't just go off in isolation. Maybe when they initially wrote the framework, they might have done it in isolation, but to actually implement, you need to get buy-in from the international community, right? And I think what that has done is informed the regulation, informed the framework. So now when, say, a Qatar goes next or a UAE goes next into actual implementation, what you find is that they can learn from some of the sort of the wrong turns that were taken in Saudi, and they can now implement with a bit more, with less friction, shall we say.
Or an existing framework that works.
Correct.
Let's leave that thought. Sorry.
Just to add to Jalal's point about the potential for people to pay to borrow these securities, of those 103 securities that we're seeing in our data set, 101 of those are trading at more than 100 basis points, and actually half of them are trading over 500 basis points. So there's quite a significant value in lending those securities.